Airbnb is a hypergrowth company whose stock has been stuck in reverse since it came public. We believe that this is a high quality business that has a very bright future ahead. And now that shares are on sale, we're happy to add them to our portfolio. Why? Here's everything you need to know about Airbnb today. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to Common Stock for supporting today's video. As of the time of this recording, I do not own shares of Airbnb.
And I do own shares of Airbnb. So, Brian, Airbnb is a $63 billion company today.
Airbnb's mission statement is to help anyone belong anywhere. This is simple, inspirational, and optional. I really like it.
I agree with you, Brian, and Airbnb probably doesn't need too much of an introduction to our viewers. It's an online marketplace to find places to stay and things to do.
The company makes money in two primary ways. The first and most important is through stays. Anyone that needs a place to stay can go to Airbnb's site and book a short-term stay or a long-term stay.
The company has also recently rolled out experiences where you can book an activity on the platform, and since the pandemic, digital experiences were also added to the mix.
One thing to applaud about this business is that the name Airbnb has become synonymous with the category. For that reason, it doesn't have to spend a lot on sales and marketing to attract users.
As we saw during the pandemic, customer demand can be greatly affected by macro conditions, which is why we give it a medium rating.
Thankfully, people that use Airbnb tend to buy from the company again and again and again. That gives the company recurring revenue.
Now, there are two important non-financial metrics to understand when you're looking at Airbnb. The first is nights and experiences booked. That just adds the total number of nights plus the number of experiences that were booked within a quarter. And as you can see, that was up about 60% year over year and 26% higher than the first quarter of 2019, which is a more fair comparison because of the pandemic.
The second important metric to know is gross booking value. This is simple, the dollar value of all money that flows through Airbnb's platform. This figure was up 67% in the most recent quarter and 73% over the last 3 years.
Looking at the company's moat, we think that it has a sizable one. The most important is the network effect. If someone has extra space that they want to rent out, they know that they can access millions of users on Airbnb. And if travelers want to find accommodations outside of hotels, they know that there's a ton of hosts on Airbnb.
We also think that the name Airbnb has tremendous brand value and has become the category leader. When somebody thinks of staying outside of a traditional hotel, Airbnb is often the first name that comes to mind.
And we also want to call out counterpositioning. Now, this is weaker than it has been in years past because people are trying to copy what Airbnb has done, but this is clearly a differentiated business model that the largest hotel chains could never copy.
Finally, when you measure the growth in total booking volume and number of nights and experiences booked, we think that Airbnb's moat is expanding.
So let's turn to financials. Over the last 5 quarters alone, the growth rate has been roughly 71% on the top line. Gross margins have crossed 80% on a GAAP basis, and net income on a GAAP basis recently became positive.
Better yet, free cash flow production has consistently outweighed net income. The balance sheet has far more cash than it does debt, and returns on capital recently crossed into the positive and likely are continuing to grow from here.
Turning to management, there's a 3-member team from the co-founders that are still on board helping the organization every day, with Brian Chesky remaining in the CEO role.
Employees give Chesky a very high rating on Glassdoor.com, and insiders continue to own about a third of the business. At current prices, that's worth more than $20 billion. That's a lot of skin in the game.
Turning to optionality, we think the company has clearly demonstrated an ability to roll out new tools that people gobble up, and it's worth mentioning that Airbnb recently came out with an insurance product for its hosts as well.
The company currently is still in scaling mode, so operating leverage hasn't kicked in. That means this company's profits could grow at a much faster rate than revenue moving forward.
When you look at the total addressable market between stays and experiences, the company pegs it at $3.4 trillion globally. They'll never capture 100% of it, but there's clearly a lot of pie left to go after.
Finally, almost all of the company's growth up until this point has been through homegrown products and is organic in nature. That's a real big positive for investors.
Now, as Brian mentioned at the outset, the stock has not done very well. It's losing to the S&P 500 since coming public. At the same time, the company has consistently exceeded analyst expectations.
Right now, Airbnb is not at all focused on returning capital to shareholders, but is instead focused on reinvesting in the business to drive growth.
So, what about risks? Well, competition is a medium high risk to consider. Now, there are companies like Airbnb that take a similar approach, like VRBO, but then there are large hotel chains like Marriott to consider.
Another risk to keep an eye on is dilution. Airbnb has been very generous with its stock based compensation packages as of recently, and that has led to a high dilution rate. However, we think this number will start to decline in the not too distant future now that Airbnb is a more mature business.
It's also worth noting that there's some geopolitical concerns to take into consideration. Specifically, we're talking about how municipalities can change their codes that can affect whether or not Airbnb's hosts can rent out their places.
And finally, while Airbnb stock is down considerably from its all time high, shares can't be called cheap today and are still on the high side of valuation. We'll have more to say on that in a little bit.
So let's review real quick how Airbnb did during the first quarter. Revenue grew at 70%, which came in well ahead of Wall Street's expectations.
The company also reported a 1 cent loss on an adjusted basis on the bottom line that handily beat Wall Street's targets.
For the quarter and on a GAAP basis, gross margin was actually down to about 76%. That's not surprising in the first quarter, while operating and net margins were slightly negative.
On the bright side, free cash flow production was very strong and nearly doubled to $1.2 billion. Net income was just about break even, and the balance sheet remains pristine.
Looking forward, management's guidance is slightly lower than what Wall Street's expecting, but either way, we should see about 60% growth on the top line.
Management doesn't provide bottom line guidance, but for what it's worth, Wall Street is expecting a substantial improvement on the bottom line on an adjusted basis.
And for the full year, because of the pandemic, management isn't comfortable giving guidance for revenue or earnings, but Wall Street sees the top line growing 63%, while the company earns an adjusted $1.91 per share, a vast improvement over last year.
So how can we tell if the thesis for the stock is on track? First, keep an eye on night and experiences booked. We want to see this number continue to grow at an above average rate.
The same can be said for gross booking volume. We want to see this continue to grow, preferably faster than nights and experiences booked, showing that customers are willing to pay slightly more.
Third, keep an eye out for that new insurance product. We want to see signs that this picks up traction and resonates with the company's existing community.
And finally, free cash flows have been very healthy and are underpinning a key part of our thesis to this company. We want to see that continue to grow quicker than revenue.
Overall, when we look at the company's recent results, we can't help but believe that the moat continues to widen and that the thesis for owning the stock is fully on track. So how did Airbnb score on our investing checklist? The answer there is quite good. On my framework, the company recently scored an 82, which is well into my high quality business range.
And on my framework, the company scored a 12, which is clearly in that anti-fragile green area.
Turning to valuation, we believe that Airbnb is currently in the hypergrowth and hyperscaling mode right now. For that reason, using the bottom line as an indicator of value isn't the best resource just yet. Management is hyper-focused on growing the top line right now and optimizing the rest of its expenses. It hasn't gotten there yet, so the price to earnings ratio on a trailing basis isn't yet meaningful. For that reason, the best metrics to judge this company's value are likely to be the price to sales ratio, the price to free cash flow ratio, and the price to forward PE ratio.
So let's look at some of those. On a price to sales ratio, Airbnb is now trading under 10 times sales. That's expensive, but much cheaper than this company has been in the past.
On a price to gross profit ratio, this company is trading at about 12 times. That's high in absolute terms, but not crazy given this company's growth.
Now, as you can see, price to earnings on a trailing basis is quite elevated at 87 times.
On a price to forward earning ratio, which uses next year's earning number in the denominator, Airbnb is currently trading at about 38 times. That's high in absolute terms, but not terribly high given this company's quality and growth potential.
Finally, I'm not one to focus too much on valuation, but the price to free cash flow ratio looks pretty appealing right now at 23 times.
So there you have it. We think that Airbnb is a very high quality business that's trading at an attractive valuation. So we'll be buying $250 worth of this stock to our portfolio today.
You can follow this purchase of Airbnb as well as all of our previous purchases by following our portfolio on common stock. And when you do, go over and let us know what you think about this decision to buy Airbnb.
We're going to read through the comments over on common stock and pick out the best one, and that person's going to win $250 paid for by common stock.
We want to give a shout out to Joshua Simca, who won $250 for our write-up on CrowdStrike. Joshua actually answered a couple of questions and provided great insight for those that were following our post.
Common stock sent Joshua $250 in cash, so if you want to be eligible to win that, head on over to common stock, follow our portfolios, and comment on the posts we make. We hope that this video was helpful. See you next time. Brian's out.